Hi, this is Account 200 and an accounting cycle problem. So in this problem, what we have set up are some journal entries, adjusting journal entries. Then you have to do the adjusted trial balance, create the income statement, statement of retained earnings, and the balance sheet. Now the journal entries, there's two depreciation journal entries here, then an interest journal entry, and finally an income tax expense journal entry. The income tax expense journal entry we'll have to do after we create income before taxes. So let's get started with the journal entries, adjusting journal entries. First one is depreciation, and it says here that it's a straight line method. We have $50,000 cost for an asset that we held the whole year. Useful life of 5 years, residual value of 5,000. For a straight line method, we take the cost of 50,000 minus the residual value of 5,000 to get our depreciable base of 45,000 divided by the estimated useful life of 5,000 is $9,000. Now on the exam, you can do this in Excel, or you may prefer to do it in scratch paper and just put in the answer. I prefer to work in Excel. I tend to have a lot of what they call fat finger errors when I'm just typing numbers in. So I'll hit the wrong numbers. So for me, it's nice to have the formula. The second one is depreciation is double declining balance method. The asset has a cost of 20,000, a residual value of 3,000, and they've had the asset the whole year. So the first thing I like to start off with, because I forget it, is the double part of double declining balance, which is a 2. And you multiply that not times the the cost minus the residual value, but just the cost. So this is a big difference with double declining balance that people get confused because they're used to straight line. Is don't take out the residual value. We don't do it in the first year, we do it in the end. But in the case of these journal entries, you don't have to worry about it. Just use the full cost there. And then we're going to divide it by 5. And that's 8,000. So let me put my credit in here. And the interest expense. So we have a 5% annual interest rate on $80,000 of principal that we borrowed, but it was issued not on January 1st, but February 1st. So we're going to have a partial year adjustment. Interest is paid on January 1. So that means we're accruing the full amount for that year. Okay. That was accrued that year, which is 11 out of 12 months. So if there had been payments in monthly payments, then we'd only have to adjust the last month, but that's not the case here. So it's 0.05 for 5%, $80,000 principal, and we're going to multiply that by the fraction of the year, which is we accrued interest 11 out of 12 months, and we get 3,667. The last one, again, we're going to have to calculate our income before taxes and then come back. So here's our worksheet for our adjusted trial balance. The depreciation expense, we have two adjusting journal entries, 9,000, and I'm going to add the 8,000, and I hit enter. 17,000 interest expense of 3667, and then up here I just say this is accumulated depreciation 17,000 adjustment. This is the next one is actually not interest, it's income tax. It has to do with how it's organized in the balance sheet is different than the income statement, but regardless, you got to put it in the right row. Interest payable 3667, and then we have to adjust the balances. So the beginning balances are 0, so all I have to do is add that. Beginning interest or depreciation expense was 0, so the adjustment is all that matters. No other interest expense during the year. Okay, so over here, if I go to the income statement, you'll see that service revenue, cost of goods sold, gross profit are done for you here. So we have to do selling, general, and administrative expense. We have to go back to the adjusted trial balance. Remember, it's assets, liabilities, stockholders' equity, dividends, revenues, expenses. So all the expenses are right. Cost of goods sold through income tax expense. They're the last items. Now, cost of goods sold has already been is already on the income statement. And if we look at the income statement, interest expense and income tax expense are going to get their own line items. So these last two we won't include in SG&A. So SG&A includes everything from bad debt expense through other expenses. So I like to do a sub calculation here. Do my sum, 29,100. So equals 29,100. So operating income is the 40,000 minus the 29,100. Now interest expense, we get it from the adjusted trial balance, 3667. And income before taxes is 7233. Referring back to this journal entry for income taxes, it says it's 40% tax rate and none of the taxes were paid in advance, meaning we still have to accrue the full amount. So 0.4 for the tax rate, and we go back to the income statement, click on income before taxes, and it's 2893. Back to our adjusted trial balance. You want to finish that off. 2893. Debits don't equal credits down here, so we know that's not correct. Equals 2893. Now, one thing I'd like to point out is if you look at the adjusted trial balance, 195,767, the balance balances it equals. However, it is not correct because in this case, if I'd left it this way, I would have forgotten to include the income tax adjustment. So when we do that, now it's a different balance. Okay, so the take-home message with the balance is that if it doesn't balance, it's definitely incorrect. If it balances, it may be the wrong balance. Okay, so now we're going to put the income tax expense in here. And our net income is the 7233 minus 2893, and we get 4340. So for the statement of retained earnings, we're going to plug that net income number in here, 4340. Now it makes it a little easier to make dividends a negative. If I go back to my adjusted trial balance, my formula said equals a minus, and where are my dividends? Right here, 7,000. And since it's negative now, I can, so it's add net income, subtract dividends. So I can just sum the column, and the ending balance of retained earnings is 6140. All right, so we have our income statement. We took our net income, put it into retained earnings, grabbed our dividends from the adjusted trial balance, and now we have to work on the balance sheet. So our first item, and I've highlighted them all for you here, is the accumulated depreciation. Again, I'm going to put the minus sign in just to make my sum easier, and we get 118.7. So what we're looking for is a 118.7 over here for total liabilities and stockholders' equity. So let's just start getting to work. We have interest payable, 3667. We have income tax payable, 2893. So we have to get total current liabilities using a sum function, 28,560. And total liabilities we can just sum because they're lined up, 108,560. Okay. Retained earnings, we'll take off the statement of retained earnings, 6140. It's an addition to stockholders' equity, and total stockholders' equity will equal everything from treasury stock through common stock. So finally, for total stockholders, total liabilities and stockholders' equity, we take total liabilities of 108,560. We add the total stockholders' equity of 10,140, and it balances. So once again, it's definitely not clearly incorrect. It could be possible that I had two offsetting errors, but if you didn't have it balance and you couldn't figure out how to balance, just say type doesn't balance here. Type if doesn't balance on test. Okay, do that if it doesn't balance on the test. And that's just That way I know you knew that it was supposed to balance, okay? And sometimes that happens. It can be difficult when you make an error. There's a lot to track through. Regardless, for the final exam, this is exactly how it's going to be. Of course, the numbers will be a little different, but it'll be the same types of journal entries to depreciation, interest, and income tax payable. You can, once again, you can work in Excel, or you can just do the numbers on scratch paper and type them in. On this one, I just showed you how to work straight in Excel.